Good afternoon, everyone. So it is Monday the 28th in the afternoon. I'm just having a look at the global indices, and first thing I want to say is that it isn't always the case. Sometimes we just have generally bullish markets and we can take advantage of all of that, but what we're getting just a lot in 2020, which actually makes sense. It's just kind of some mixed signals, and I'm just a lot more cautious. Doesn't mean I'm not trading necessarily, it just means that I'm aware of the general change in kind of I guess in structure and behavior. So having a look at the Dow, first of all, it is in a downtrend on the daily. Right, so that's a fact. It's also quite bullish in terms of the current last couple of days of price action. Really nice and bullish. All right, it's also holding above a nice sort of weekly support level there. So all of that in isolation is actually nice and bullish. All right, so again, I spoke last week about how I wanted a bit of a deeper correction. And if we do finish up with a monthly bearish candle and a break of the low that's in the first couple of weeks of October, and we fall through this monthly key level, it just makes complete sense. We're going to see the market head down low again. All right. In isolation, the weekly looks bullish. There's a nice bullish candle here, especially if we break the high of last week's candle, to support the idea of price continuing, making another run up at all-time highs on the Dow at 29,000. So the way I am going to be playing this, at least on the sort of much lower time frames here in terms of the daily, is really keeping an eye on how it reacts, obviously with these recent highs. So I'm going to keep an eye on those recent weekly highs, which will kind of put it up here, or at least daily highs, and have it break that trend, and then obviously keep an eye on that on the much lower time frame. So if I go down to say the 4 hour, I'll be looking for short-term buy opportunities, especially if I can get above this daily level, come back to retest it for support, then I may be looking for shorter-term buying opportunities. So that, first of all, saying that is the case. It is still in a downtrend, and therefore, should it in the next 24 to 48 hours produce a bearish rejection candle, maybe at this level, and then break through by the end of the week, it is possible that it could fall through 27 and head lower. So that is also a very real possibility, and I will also be taking that into account. So that could find its way heading down and closing lower by the end of the week. And the implication, if we close lower by the end of the week, the implication is we're likely to start heading down towards 26,000, down towards here, and then from that point onwards, we're starting to head even further down if we break through 26,000. So how we go over the next few days is kind of crucial, because if it manages to break up and finish higher for the week, that's a really nice bullish sign. And if we have an attempt in the next day or two and fail and then head lower by Thursday or Friday, the implication is much more bearish for the next week. So this is the dilemma, because this week is basically in an area where it could change direction or not, but it is in a daily downtrend, and that's a fact. So trading in a daily downtrend also just means caution, and it has a weekly uptrend. It looks nice and bullish. So there's this conflict. So although I feel like when I'm describing my videos, they always sound very similar to me, the fact is that actually that has been largely the way the year has gone. There's been some bullishness, but then it's mixed, and then some bearishness, and then it reverts, and so on. So that's really how it appears to me at the moment. Looking at the S&P, same thing again, really nice bullish recovery, but it is still in a downtrend. It is now above 3,300, nice monthly level, and it is a really nice bullish swing low on the weekly. So weekly looking nice and bullish, daily in a downtrend, but looking nice and bullish on the last few days, monthly overextended, producing a potentially bearish candle. So conflict, three different potential outcomes here. And so for now, as I said, I'm going to be leaning 60-40 bullish over bearish, but I'm also going to keep an eye on potential behavior. Very, very cautious just over the next couple of candles, because this is where there's a potential swing low or swing high that could set up. Look at the NASDAQ. Of course, it's formed a double bottom. When I say of course, what I mean is this is the most bullish, and it has already produced that swing low, and it looks beautiful. In isolation, it's a nice, healthy correction. It is the most overextended. It could finish lower, sure, but in isolation on the weekly, this is bullish. It pulled back to this area that I highlighted as a minimum pullback retracement area. So it has satisfied my criteria, my requirements for a healthy correction. I am happy about that. We're not away from the bigger correction, which is on the monthly time frame, but we have absolutely ticked the boxes on this. And I have to comment on that. I got to say, look, it has met that criteria. I did highlight those areas as a weekly area to pull back from. Doesn't mean that we won't now come back to this level. We are going to have a bigger correction at some point in our future. And the longer it takes for us to have that correction, the worse it's going to be. So we would much rather really just have that correction now, and it's a small correction just down to these levels before resuming, rather than have price really go out of control and have it do the same correction, by the way, the same kind of distance down. Relatively speaking, it's going to be scary for people on the daily. And so that's really the issue here. But this is now a double bottom. All right, and this implies, and it's broken that downtrend. So the NASDAQ is bullish. So absolutely, I'm now more enthusiastic about intraday trading opportunities for the NASDAQ up to these recent highs. Okay, cool. Then looking at the mini Russell 2000. Downtrend again, this is slightly weaker. This is not as bullish. This is a very similar weekly chart to oil, where it's kind of drifting sideways and starting to look a lot weaker. It's actually a lower potential, lower high, and so this overall, the structure is weaker by comparison. And that's, if you take a moment to think about the fundamental implication of that, it implies that there's a certain lower level of corporations that are maybe not as healthy at that point. And so if we do have the split between the kind of upper 10% echelon and everything else, this would be more representative, combined with the S&P 500 would be more representative of that, and therefore we would potentially see more weakness in that. So this could be maybe more accurate of where the crumbling is going to, or cracks might be occurring in the economy, so to speak. Just a thought. Then moving on to the UK. So the UK is absolutely in a sort of downtrend at the moment, has produced that swing high. It's not so weak that it's falling, but it's attempting and failing. It's drifting lower on the weekly. It is at a level of support. So it could still rebound from this, but by comparison, it's just not as strong. No matter which way we want to spin it, is just not as strong as the US markets, and therefore breaks below the levels of support at about 5.8. May present, especially if the US market gets weaker, this will present absolute shorting opportunities down to 5,500. I think what's frustrating is that after 30 years, it was really nice to break above that kind of 6,300 level, and it's a bit frustrating to come back and find resistance at that level again. That's just kind of a bit of a side note. Looking at the DAX, the German DAX, flattening out on the daily, but starting to stabilize a bit on the divergence, sitting obviously at all-time highs in terms of resistance levels, and the weekly also going a little bit sideways. So this market is much more likely to struggle to break through that resistance, even if it does manage to climb. It's sideways and therefore is not as strong as the US. And so it's interesting now, we can see the NASDAQ looking very strong, S&P and Dow looking not as strong, but still potential bullish. Then we see the Russell, which is looking weaker. Then we just head away from the US and we start to see more and more weakness. Looking at the French CAC, starting to break lows here on the daily, starting to head into a downtrend, a very sideways downtrend, which means not fully bearish, but partially bearish, struggling with that 5,000 level of resistance and a potential swing high now on that monthly. So cautious, but that's looking weaker. Euro stocks finding some strong support within a downtrend sideways, again also in an area where it could potentially start to fall lower, and for that, that's going to be that 350 level. If it breaks below that, it'll start to fall. So then looking at the Nikkei looking more bullish. That daily is looking really, really good. The weekly not looking so bad, and actually it's taking another run, likely to take another run up to that 24,000 level all-time highs. So that looking now, Asian session there, looking Tokyo session starting to look a little bit more bullish. The Australian ASX here producing a similar swing high to, say, some of the UK or German ones, sideways, similar to the European indices as well, and the daily on a downtrend. So this one is much more like the European indices, and therefore potentially likely to head a little bit lower. Overall it's been actually really good. The recovery on this has been really, overall it's been looking really good for 2020 and 2019, but now not looking as strong as it should. So to sum up, it means that if I'm going to be long, it's going to be only on the most bullish, which is NASDAQ first. I'm keeping an eye on all the others because they're going sideways and they could potentially head lower, and that's really going to come back to those key daily levels. And so, as I said, the daily trend, I don't believe we're out of the woods yet. The weekly looks potentially bullish, but that daily is still on a downtrend. That means, again, in the next couple of days, similar to some of the other asset classes I've dropped my analysis in on, the next couple of days appear to be quite interesting in terms of where there could be a change. It might or might not be connected to there being presidential debates happening this week with Donald Trump against Joe Biden. So we'll see how that goes. It could be related to that, which then could be tied to the potential outcome of the election, which then could be tied to the US economy, which could be impacting everything else. So I guess we'll know, because if there's a reaction in the market following the, if it's an eventful outcome and there's a reaction in the markets post that, then that would be the correlation that I'd be looking for. So that's it. So I'm going to exercise some sensible caution here. As I said, there are conflicting signals between this. And so probably what I'm going to do is probably sit on the sidelines very cautiously for a couple of days to see what happens with the market. And unless the NASDAQ looks particularly bullish, then I'll look for shorter term, 1 hour, 30-minute, 15-minute opportunities to the upside off those key levels, especially if, say, it breaks these daily support resistance levels. And that's it from me. So have a fantastic week. Thank you very much.